So our job as traders, if you bought it at 18, it's just unfortunate. But this is where position sizing and dollar cost averaging comes in. So as an experienced trader, I knew not to buy this thing up at 18 cents. When I saw Hbar spike like that, it was up like 70, 80% in literally one day. Look at this daily bar. Okay, that was a 80% bar right there. 9 cents all the way up to 16, that's an 80% move. So I'm not going to chase that, right? What I want is now a pullback, right? I can get into the smaller time frame now that I got confirmation on my weekly, because the weekly time frame will tell you when we're going up. So think of the weekly time frame as the bigger time frame. So the way I like to explain it is think of it as like a whale swimming in the ocean. Okay, you got a whale swimming through the ocean. And then when you get on these smaller time frames, the daily, I like to use the daily and the 4 hour. Okay, the daily and the 4 hour are the smaller time frames that I like to use. But I'm not even looking at those unless I have confirmation on my weekly chart. Because once I get the direction of the whale, think about these smaller time frames as like the little fish, like swimming underneath the whale so the predators can't come and eat them. Right, so the sharks can't come and eat them. So the little fish are swimming with the direction of the whale. Right, we want to go in the direction of the whale. We want to make sure the whales are bullish. So this was confirmation, yes. Right, but this just created its range. So the trade range on this now is from 8 cents all the way back up to 18.9. Okay, so if you did buy it at 18 cents up here, okay, learn your lesson. Okay, and remember, wait for a pullback. So when you get this big move, if you see a big candle like this, get into the daily now and wait for the next green dot to add. So I actually got in on this around 12 cents, and I'm down about 15% on the trade. But guess what? Okay, my portfolio, my size of my position was only 5% at the time. So I only allocated 5% at 12 cents. Okay, so I'm down 15%, but I'm only down, right, a very small portion. 1% of my portfolio I lost on that trade because my position size was only 5%. It's a good general rule to only add in 5% increments. Okay, that's my general rule right there. Okay, so I'm adding 5% here, okay, at 12 cents, and I should have waited for the green dot, but I'm not kicking myself because, again, we're still around our average price. Okay, and the majority of retail is buying up here between 16 and 18. So this thing's just pulling back. So I added 5% at 12 cents because, again, a pullback from 19, okay, we hit 19 cents, a pullback all the way to 12 cents. That was like a 30 or 40% pullback. That was a big pullback, but it just happened a lot quicker. Okay, people freak out about a 20% pullback on Bitcoin. This thing pulled back 40% in literally the matter of, right, 1, 2, 3 days. Okay, so now on the next green dot, what I can do is I can add to my Hbar position again. So what I decide on doing is adding, right? What I want to do is I want to add an additional 5%. So I'll go in again, and if that comes down, I guess my average entry was 13 cents, but I got it at like 12.5, I believe. So what I can do is I can add again either now, right, or on the next green dot. So when the next green dot comes, if that comes at like 10 cents, right, down here at 10 cents, I'm averaging down. So my average cost would go from 13 cents down to about 11.5 because I bought the other half at 10. So it's called dollar cost averaging. If you guys don't know what that is, it's literally the practice of investing a fixed dollar amount on a regular basis regardless of the share price. Okay, that's not a very good explanation. But the whole thing is when a position gets down 20% and we're still above our macro support, right? Our macro support is at the bottom of the green candle that we're getting the green dot on. That's the whale support. This is where BlackRock's stepping in and buying it. Okay, when BlackRock steps in and buys it, they don't want it to go down. They're buying it when it's going up, right? So we still got to be bullish on Hbar. You guys are freaking out again because you bought it up here at 18. If you're freaking out about your position, what happened was you are putting on too much of a position at once. Again, 5% increments is a good general rule. I never want to exceed 20% on my positions. I know I'm exceeding VeChain right here because I'm really excited about the project. I'm at about a 30% allocation. But typically, as a general rule, I don't like to take more than a 20% risk on any one position. So right now, XLM's sitting at a 16% position. If I get to a spot on XLM, right, if I zoom in here, where I'm looking to average down on XLM again is the weekly green dot. So if I get the weekly green dot on XLM, I'm going to top off my position here using dollar cost averaging. My average cost is 11 or 12 cents right now, and it's sitting at 11.2, so it's only down like 8%. So I'll add that additional 4 or 5% once I get my confirmation on the indicator. Okay, and I will get that up to my 20% position. Okay, I also want to add link. I want to get link up to a 20% position. And again, I'm sitting with 25% cash on the sideline. You guys, I've been telling you, I'm not fully bullish on the market yet until we get that green dot on BTC.